In this video, I'm going to give you an introduction to DeFi for developers. All right. So if you're not familiar with DeFi, it's short for decentralized finance. Okay. And I'll give you a quick overview of what it is in this video. If you want a really general introduction, I've got a YouTube video out there that says, what is decentralized finance? That'll give you a good high-level overview of some of the projects out there. I'm going to reiterate some of those things inside this video, but I'm going to focus on what you can do as a developer to get started using DeFi in your own blockchain projects. Okay. So that's going to be the focus of this video. So DeFi just stands for decentralized finance, and it basically takes traditional financial use cases and ports them over to the blockchain. So basically, they're blockchain applications that allow you to do things like savings, loans, derivatives, and a lot more. Okay, I'm going to show you examples of this here. You can go to a website like DeFiPulse.com to look at some of the really popular decentralized finance applications out there. I'll talk about these in a minute, but I want to just note that DeFi is a really rapidly growing blockchain use case. All right, there's so many different experimental efforts out there with blockchain technology, and DeFi is gaining a lot of traction because it has so many users baked in already. All right, cryptocurrency traders, people who already know how to use the blockchain and want to take advantage of all its benefits. Right, people already know how to use cryptocurrency, and this is really just a natural continuation that's going to serve those users' needs. And this is a really great place for regular users, people who don't use the blockchain yet, to also reap benefits of blockchain technology as we start to onboard them and see this play out over time. Okay. So right here you can see the amount of US dollar launched into DeFi projects hit an all-time high in February, just before the global pandemic happened, and we saw the stock markets tick backward and also cryptocurrency markets. It seems to be pretty steady here. I don't expect this to crash anytime soon, but there's clear demand for DeFi. Even if you back this out to 1 year, we're still doing all right. Okay? And you can even see that we're seeing a lot of green on this chart through the different applications. Right, they're starting to see more adoption. People kind of come back and use more money with DeFi. Okay? So like I said, DeFi basically just takes these traditional financial applications and more and moves them over to the blockchain. And you can see lots of different projects built on top of Ethereum that accomplish these kinds of things, like MakerDAO, Synthetics, Compound Finance, Aave, Uniswap. You can check out this other YouTube video as I talk about more of those projects. My goal isn't to introduce you to all of them today, but to let you know how you can get started building your own DeFi project as a developer. Okay, so I'm going to introduce you to some different protocols and their developer documentations and how you can start using them today. And then we'll probably continue on with this, make this kind of like a series where we actually focus on some of these particular use cases one by one. But today's gonna be a little bit of an intro. I'm gonna show you how to get started, show you where you can start writing some code and all that. Okay, and you can leverage this information to do a few different things. You can build your own smart contracts that talk to these platforms. They integrate with things like MakerDAO, for example. If you want to use the DAI stablecoin, I'll explain what that is here in a minute. Don't worry if you don't understand quite yet. Or if you want to interact with a compound lending protocol, I'll explain that in a minute. Okay? And also, you can use this information to simply build your own front-end applications that leverage these protocols. So one example would be InstantApp. That's essentially what InstantApp does. Is it's a user interface that talks to these different DeFi protocols so that you can use them all in one place, right? So MakerDAO is right here, Compound, and Uniswap, right? So that's what you can do. You can build your own smart contracts or applications that use these, or you can build your own front ends that all use these, and a combination of all those types of things. So I want to introduce you to a few of these different things and how you can get started. So the first thing I want to show you how to use is DAI. So what is DAI? Well, you might have heard me just talk about MakerDAO and DAI, and what are those things? Well, MakerDAO is essentially who created DAI, and DAI is a stablecoin. It's a cryptocurrency whose price does not change. All right, this is really critical if you want to build a DeFi application. So a lot of times you'll see currencies converted from like Ether or some sort of ERC20 token to a cryptocurrency like DAI, for example, so that the price doesn't change and it's pegged to the US dollar. It won't lose value, it won't gain any value, but it gives you that benefit. Okay. So the great thing about DAI is it's an ERC20 token, right? And there's no real documentation that I'm aware of for DAI, but you can look at it here on Etherscan. You can look up DAI, right? Just search for DAI and look at DAI stablecoin here, and you can basically go to read contract. Actually, let's go to the contract here and look at the verification box here to see the code. Okay, so essentially you can see that DAI is an ERC20 token, which basically means it follows the ERC20 spec on Ethereum, which means that it behaves in a predictable way. All right, so if you look at the functions on here, it has functions that other ERC20 tokens do, like transfer. So you can essentially just send DAI tokens like this. You can spend them on a cryptocurrency exchange with transfer from like this. All right, and you can also see things like balance of. Right, there are some extra functions that DAI implements. It has a lot more under the hood than a basic ERC20 token does, but it has all the required features of ERC20 tokens. So you can basically plug and play in your own DeFi applications just by essentially taking the ABI and pulling in your project and then using the address, and then you can implement the ERC20 interface to spend DAI in your own apps. Okay, so that's really critical. So I'll show you that here. You can go to the contract and let's see here. Just click on the contract checkbox again, and here's the ABI. You can basically just copy this and then copy the address here. Let's see. Here's the address right here. Oh, sorry. Let me find it. Go back. Here it is. Here's the address right here. Okay, so if you have the ABI and the address, all you need to do is use the Web3.js library to do things like get the balance of someone who holds DAI, and also implement the transfer function. Right, implement the transfer function here to spend DAI without your application, and then instantly you have a dApp that supports a stable cryptocurrency. Okay, so that's really key. It's really critical. Right, that's one way you could use DAI. You can also create an application that allows people to exchange other tokens for DAI, and that's exactly where our next example is going to come into play with Uniswap. All right, so Uniswap is a decentralized exchange protocol. All right, so here's the developer documentation for this. I'll try to link this in the video notes so that you can also look at this. So Uniswap allows you to do token trading and all kinds of great things. I'm going to introduce you to that here in the developer documentation. Okay. So here are the basics about how you use Uniswap. Essentially, it has several things like a factory contract, an exchange contract, all right, and then these token contracts. Okay. So essentially, all you have to do is follow the developer documentation here. You can see, like I said a minute ago, all you need is the exchange ABI. All right. Remember how I said with MakerDAO, you use the ABI and the address. So the same type of thing for Uniswap. Essentially, it has some smart contracts already deployed to the blockchain, and all you have to do is interact with them with Web3.js. Right. So here's the actual Uniswap exchange ABI. All right, and then you just need the Uniswap exchange address, and you create an instance of the Uniswap exchange contract with Web3 like this. You just say exchange contract, and then Web3 ETH contract. You pass in this ABI, and then also this exchange address. Right. It's the same thing you essentially do for the MakerDAO DAI token. Right. So what can you do with the Uniswap contracts? Well, you can exchange tokens. So you can do lots of other things. You can pool liquidity so that you can aggregate funds from different wallets to make trades, right? You don't have to hold all the same tokens in one wallet in order to make the trades. You can add liquidity this way. You can also remove liquidity from the trades as well. All right. So, and then here is the here's sort of the lifeblood of the functionality, which is trading tokens. All right. So there are a few different ways to do this. You can trade Ether, Ethereum's cryptocurrency, with ERC20 tokens. You can trade ERC20 to other ERC20 tokens. All right. And let's see here. Here's examples on how you can do that. So you basically create a sell order like this. All right. You calculate your input. All right. And then you calculate the output. All right. You can also do a buy order. This is the calculation right here. All right, and then you can also specify the exchange rate as well, or calculate the exchange rate, I should say, and also the fee amount. Okay, so then you can also calculate ERC20 to ERC20 trades like this. All right, and then you can also specify a deadline for the trades as well. Okay, so finally, you would need to execute the trade itself. So what you do is essentially you calculate the input and the output like I just showed you in that documentation, and then you have to actually build the transaction yourself, and then sign it and send the signed transaction with Web3. Okay, so I think that's one reason I don't really show you in the documentation, but here in this blog right here is a good example of how to do that. Okay, so I'll put a link to this down in the description below so you can see that as well. All right, so that's how you would implement token trading in a DeFi application. So next, let's talk about flash loans. Okay, so I just did a video on flash loans inside the Video Vault, so I probably won't go on too in depth on that. You can check out that video for step-by-step instructions on how to do a flash loan with Aave. But let me just show you right here. So essentially, Aave is a protocol that facilitates flash loans. So what are these? So flash loans are basically a way to borrow funds on Ethereum with zero money down. So think about trying to borrow money for a house or something like that in the traditional financial system. You would have to put down collateral, okay, the house in this case. Well, you have to put down some sort of deposit, right? Let's say you put 20% down to buy the house, and then basically you have collateral, which would be the house itself and also your down payment. So if you didn't pay it back, then the bank could repossess your house, right? So flash loans, you don't have to worry about any of that. You can borrow money instantly without having to put any money down, offer up any kind of collateral. So how is that possible? Well, essentially, you're able to do that as long as you pay it back in the same transaction. So, quick refresher on that. Ethereum has complex transactions versus simple transactions. If I have my MetaMask wallet and send you, some cryptocurrency, that's a pretty simple transaction. But you can do more complex transactions where you say, 1, borrow money, 2, make a trade, 3, pay back loan. And this is something that happens all in one shot, all in a single transaction. So that's how a flash loan works. You can borrow as much money as you want to, as long as you pay everything back in the same transaction. And what this allows you to do is take advantage of arbitrage opportunities, where you can borrow money, make a trade, and then pay all the money back and reach some sort of profit. Because different exchanges have different prices sometimes. So sometimes on exchange A, Ethereum might be $100, and then on exchange B, Ethereum might be $101. And if you traded $1 million worth of this, you could take advantage of this price discrepancy, right, and get a substantial profit. Okay, so that's an example of why you want to use the flash loan in the first place. And Aave is a protocol that allows you to do that. You can basically use their liquidity pools to borrow as much money as you want. I think it's up to like $16 million or something like that. And you can make your own trades and take advantage of arbitrage opportunities and really anything you can think of with flash loans. So like I said, go check out that previous video for a step-by-step instruction on how to get started with flash loans. But I want to point you towards Aave's developer documentation here to show you how to get started with that. Okay. So the next thing is Compound. So Compound Finance is a protocol that allows you to do savings and lending on Ethereum. So flash loans are a way for you to borrow money with zero money down, but Compound is a way for you to borrow money by offering up some sort of collateral. Okay. This is a really popular thing with traders. If they want to go short or long on trades or something like that, essentially they can borrow one cryptocurrency by offering another cryptocurrency's collateral. So let's say you wanted to borrow a cryptocurrency like 0x, for example. Let me just pull that up here. Let's say 0x cryptocurrency. All right, so this is Ethereum powered cryptocurrency 0x. Let's say you expect the price of this to change. Well, what you could do is basically offer up your Ethereum to this protocol, lock it in this protocol, and then borrow 0x and go trade it. If the price changes, you pay it back, and then you have a profit and you get all your money back in the first place. Okay, that's an example of why someone might use this to borrow money. Okay, so on the other side of the equation, you can earn interest. Okay, so you can basically put money into the Compound protocol and earn interest on it. So let's just say that you had $1,000, you could put it in Compound Finance and earn maybe like a 10% interest rate on that over a year. So that'd be a lot better than putting that money in your bank account for a year. Okay. So that rate changes a lot. Don't quote me on that. Also, I'm not giving you financial advice about where you should put your money, but that's an example of how you could also take advantage of this. Okay. So Compound has developer guides, so you can walk through step by step on how to set up your developer environment for Compound. All right, just like this. All right, I'm gonna go through all these step by step, but it's pretty straightforward stuff. Looks a lot like the other tutorials that I've done. All right. If you know how to use Web3, you should be able to do this pretty easily. All right. Ganache CLI. I showed you how to do that in the last video with flash loans. All right. And so essentially, you just interface with the Compound contracts just like you would any other smart contract. Okay. And you can see some full code examples here. All right. And then you can go even further to do things like supplying assets to Compound. That's basically lending, and then borrowing assets. All right, that's like pretty self-explanatory borrowing. Okay, and you can follow these step by step with a developer documentation to see how to do that as well. Okay, and they've got some really great explainers on how to do this in depth, some nice graphics and things like that. Okay, all right. So the last thing I want to talk about is decentralized oracles. All right, this is really important. I'm going to talk about Chainlink for this. So what is an oracle and why do you use one? Well, pretty much the blockchain is a closed system. All right, and the only real data that exists on the blockchain is information that happens on the blockchain. So for example, if you have cryptocurrency, the blockchain is aware of your cryptocurrency balance, but it's not actually aware of what the cryptocurrency is worth, right? An exchange essentially decides what the cryptocurrency is worth. So how does the blockchain know what the price is? Right? So, my MetaMask wallet knows that I have a certain amount of Ethereum, all that's written to the blockchain, all the transactions, my account balance, everything, but it doesn't know what the Ethereum price is, okay? So that's information that exists outside the blockchain. So how do you get that information onto the blockchain? Well, that's what an oracle is for. And there's a special protocol, a decentralized oracle network called Chainlink that's very popular in decentralized finance right now. So essentially, oracle problem is difficult. You could basically just feed a, you can't make API calls from smart contracts because of how the blockchain works, but you can implement something like Chainlink to feed this outside data onto the blockchain, right? And here's how you get started with that. Let's say you wanted to build an exchange that had cryptocurrency price information. Well, that's what you would use Chainlink for. Let's say you wanted to build a betting application maybe for sports. How would you get the score? and provide the information to the blockchain. Well, this is what Chainlink is for. Okay, so they've got some pretty straightforward documentation here. They have a truffle box that you can use. You can install with npm, yarn, anything that you normally use. And it's really easy to get started. Essentially, you can create your own smart contracts that have connection to Chainlink. They provide you with their own smart contracts with their addresses and everything. And you just do some basic initialization inside your smart contract like this. Okay, so essentially what you do is request very specific data. And you can receive it, all right? And then they have even a full example here about how you get the request and use it inside your app, okay? So let's look at this request Ethereum price. This is the example I showed you a minute ago. Let's say you wanted to make a trade in your smart contract and you wanted to actually get the Ethereum price to do that. Well, you use Chainlink, you make the request, all right? And then here's the specific endpoint for that. You can see the Ethereum price, here's the symbol versus US dollar, all right? And then you send the request to Chainlink, and then you just fulfill it with the data you get back, all right? So that is an example of how you would use Chainlink with your smart contracts. You can continue on this documentation to see everything. They have a walkthrough, all right? This is all a really great gold mine for getting started. Okay. So that's all I've got for today. This is your crash course to DeFi. This is sort of like a choose your own adventure. If you want to dive deeper into any of these protocols, here's where you can get started. Like I said, I'm going to probably continue on this, but this is a series about DeFi and talk about some of these things individually, maybe a little more in depth. So I hope you all like this. If you have any questions, go ahead and leave them in the community chat. And until next time, thanks for watching Blockchain Mastery University.